Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for the Precious Metals and Critical Minerals Conference. Our next presentation of the day is from Liberty Gold. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Jon Gilligan, President, Chief Executive Officer, and Director of Liberty Gold, which trades on the OTCQX Best Market under the symbol LGDTF and on the TSX under the symbol LGD. Welcome back, Jon.
Thanks very much indeed. Really appreciate the opportunity to present again on the Sidoti platform. And thank you to everyone listening at the moment for making the time to hear an update on Liberty Gold. We have a new logo, and you'll see a new, fresher style, I think, for the presentation. And really what that's doing is that's reflecting Liberty's transition from an explorer discoverer historically with the discovery of the Black Pine deposit in the Great Basin of the US. We've taken this opportunity to migrate the company from an explorer to a developer with a very strong discipline focused on delivering that mine into production in the next 3 years. So I'd like to give you an update on that story. I will be making forward-looking statements in this presentation. These are the caution notes. Please would you read them at your will. This is the first forward-looking statement. For those who are familiar with this curve, or perhaps those who are not, this is the famous Lassonde curve, which tracks a sort of change in value of a mining enterprise from discovery or exploration, if you like, on the left-hand side through to production on the right. The story for Liberty Gold has very much been one of discovery, and the group that created Liberty Gold have a tremendous record of discovery of gold, particularly in the Great Basin, but also in Turkey. We've taken Black Pine through this discovery curve. We've sort of endured, shall we say, the orphan period in the middle, where I think is the most interesting time, in my view, for companies and for mining projects. It's where all that work gets done in preparation for a new mine. And that's typically unloved in the market, and you see a value reduction relative to the sort of upside potential, shall we say, for exploration. But really what's happening is you're building a foundation upon which, for those who have technical discipline and understand the process and can endure permitting, you've got the opportunity here to ride that second wave of the curve up until production. And there's some very, very good examples recently. Companies have done that. Black Pine, I think, and Liberty Gold are just in that kick where we're starting to track up the second wave of that curve. And I think that makes us a compelling re-rate opportunity. And I'm hoping you will take that away from the next sort of 15, 20 minutes. This is our highlights. This is really who we are. At Black Pine, which is our flagship project in southern Idaho, we produced a pre-feasibility study last year. Very attractive mine, a long mine life, a fairly decent production rate, modest capital to get into, and a very nice sort of overall economic metric. We like the US. Still remains a fantastic jurisdiction. The Great Basin, which is our main focus, is a hugely permissible area. I think there's all sorts of exploration opportunity in the basin. Huge gold endowment. And I think for those who understand the geology, and that is in our DNA, I think the opportunity is there, and the growth potential certainly exists. And so that is our focus. That's where we're taking the company. Black Pine is our core asset, and our plan right now is to take that through to operations, as I said, in under 3 years. This is the team that's going to do that. We just brought on Lauren Roberts, bottom left corner, onto the board. Lauren is a deeply experienced senior executive, former COO of both Hecla and Kinross, and brings very strong operating expertise onto the board. And the rest of our directors really cover off in a very broad sense all of the oversight areas that we would need, or we need as a company, to have a board that guides us and supports us in the right direction. From the management team, our most recent addition, Brad Ralph. Brad comes from strong capital markets background, and he's really anchoring the whole corp dev. Where are we taking this company? What's the M&A opportunity look like down the road? And prior to him this year, we had 3 new additions to the board, Tyler, Owen, and Richard. Those 3 together with Pete formed the technical team that's taking us through feasibility, in which we're in right now, and through detailed engineering to get us to a construction decision in late 27. Matt at the bottom heads up our in-house permitting team. We have 4 members in that team. Matt has deep experience permitting US projects through NEPA. I think he's taken 15 mines through NEPA, rather than 15 NEPA assessments, shall we say. And we have a very, very strong internal team, both on the community side and the environmental side and on the permitting process. So we've got the oversight, we've got the management team, and in addition to that, as I'll mention in a moment, Centerra came into the share register in September this year with a 9.9 stake, which we were delighted to invite them into the company. And through them, we have a technical committee, which meets on I think it's quarterly basis. And that technical committee provides specific broad oversight to the project team, the Black Pine project team, to ensure that that team's got all of the resources it needs and can deliver on both the time frame for studies, but also, most importantly, the technical quality for those studies. And we're delighted to engage and work with Centerra in that way. They're a very positive, very progressive company, good people. From a corporate capital structure point of view, 511 million shares outstanding, just under 600 fully diluted. You can see that we have 2 sets of options due in essentially May 26 and April 27. So a fairly big chunk of funding to come into the company in those periods, given it's a 45-cent Canadian strike price. I think we touched 90 cents, I think, yesterday. So have some reasonable belief those warrants will be in the money. Cash in treasury, $32 million. And that's from 20 million of that came from the Centerra placement in September. Critically here, with the cash in treasury now and the money in from the warrants over the next essentially 18 months, we have sufficient funding to take the company, the permitting piece and the technical piece for Black Pine through to a construction decision in 27. We do not need to go back to shareholders for that purpose. So that's a very strong balance sheet and a very strong position to be in. In terms of ownership, you can see 30% institutions, the 9.9 at Centerra, as I mentioned. Key institutions, Van Eck has been is our principal institution, largest institution, been in the stock for a long-term, sticking 6 or 7 years. We also have Franklin, Merckx, RCF, Conway, Amati, Commodity Capital, Libra, and Extract. These are some of the top names in the business and have been very supportive over a long period of time. Wheaton as well came into the stock a couple of years ago. They hold the only royalty on Black Pine, which is a 0.5% royalty, and we have a 50% buyback right on that. So all of the capital, the numbers, the finances that you see on Black Pine are calculated with a 0.25% royalty. That puts us in a very strong position down the road should we wish to put some kind of additional royalty to finance the project, and it makes it a very attractive upside opportunity. So a key feature of Black Pine. The company does in fact have 2 assets. We talk a lot about Black Pine, but we also have the Gold Strike asset in southern Utah. That's a 1 million ounce system. It's been well drilled. PEA out in 2018. We paused going into a PFS because we've been working through a water supply opportunity. We as a company like to de-risk projects before we go into the next study phase. and that particularly means acquiring a solid water resource and supply for the future mine. We're still working on that, and Goldstrike is on the back burner at the moment. As it says, strategic alternatives are under evaluation. We also found some antimony on the margins of that system, and we announced earlier this year that we would spin out that antimony asset. We are still working on that, and I've made a commitment to come back to shareholders before the end of the year with an update. So I'll leave it at that, and we'll focus this conversation on Black Pine. Where is it? Well, as you can see on the right-hand side, it's about 2 hours north of Salt Lake City, just off Highway 84. Quite literally, you could see the highway from the mine site. It was a previously producing mine. It was mined in the 90s by Pegasus, and they produced just under 500,000 ounces of gold over a 6-7 year period. A run-of-mine heap leach operation, open pit. Run of mine, for those who are not familiar with that term, means no crushing or no conveying, no agglomeration. So you blast the rock out of the ground, put it in a truck, and dump it on a heap, irrigate, and then extract the gold that way. Very simple, technically straightforward, low cost, and that's exactly the same type of operation that we are envisaging for reopening the Black Pine mine through our studies and ultimately through a construction decision late 27. Fantastic access. We have all of the water that we need for our operation. We secured that very early on, pre-feasibility. There's power to the main gate. And from an environmental and permitting perspective, it's a previously producing site, so previously disturbed. It's been rehabilitated, but this is a very arid area. The Great Salt Lake, you can see in the image, used to actually be the shores of the lake are directly opposite Black Pine. So the lake has dried up over the last 10,000 years. This is an arid area. We don't have any threatened or endangered species. There's no surface waters, no aquatic species. We are mining above the water table, so we have no pit lakes, no pit evaporation. A very straightforward site from an environmental point of view. And because it's a previously disturbed site, we're not breaking a pristine viewshed, which is quite an important feature these days. This is the reserve and the resource statement from the pre-feasibility study that came out in October last year. So we're looking at just under 5 million ounces in resource. This is at a $2,000 gold price, and with gold at 4,200, I think it is today. Clearly, price is going to have an impact as we go into new resource estimates in the coming period. 3 million ounce reserve, of which 2 million ounces were produced, so roughly a 70% recovery. That reserve, as you can see again, was floated at $1,650 gold. As we think to do mine planning for the feasibility study, again, we will review those prices, and I think there's some upside opportunity both in the reserve and the resource price. The real economic opportunity here and what's driving this as a future mine is the just under 2 million ounces in the high-grade core. That averages a gram above a 0.5 cutoff. And these are discrete sort of flat-lying layers or lenses inside a carbonate sequence that are very well defined. They're easy to predict in space. And we've just had some results came out this morning that shows that as we're doing infill drilling for feasibility, we're seeing really nice continuity of our models where we predicted across a gap between two drill holes, and we drilled it in the middle and we kind of nailed it. So that's very, very encouraging. Plus, of course, there's a little bit of upside which seems to come in. So I think reserve growth and resource growth, I think, are very real. And the team is targeting 10 to 15% upgrade in both resources and reserves going into feasibility. We'll see where that takes us. Price is a feature, but we've also seen real increase in resources from our drill program, which I'll mention in a moment. These are the high-level economics from the preliminary feasibility study. Decent mine life at 17 years, 183,000 ounces a year production for the first 5 years, for an average all-in sustaining cost of just over $1,200 US. So today, that's a fairly healthy margin, and very, very interesting free cash flow on an annual basis. These types of assets, open pit, run of mine, heap leach, are not expensive to build. So 327 initial capital. That includes about $90 million US for a pre-strip. And we do a pre-strip not because we need to move waste, but we have lower grade ore on the surface. We mine through that to hit one of those higher grade areas, and we put that high grade material on the heap early on to increase the payback and have that higher grade and higher production rate early on. This is what the site layout looks like, a very simple site. Again, you can see I-84 on the right-hand side of the screen, so access is very simple. Power line to site, as you can see. Those pits, the Discovery Pit and the Rangefront Pit, are the principal open pits. Discovery Pit is simply opening up an existing pit. And the heap leach facility right in the center screen is the area that we build to process the ore. And the process facility down the bottom is a relatively small footprint building, and site services are simply a truck shop and a fuel bay. So this is a very simple, easy site. There's no tailings facility. There's no large mill building. Very low footprint, easy to construct, fast to construct. It's about a 9-month construction period, and relatively easy to rehabilitate at the end of the road, at the end of the mine line. I mentioned water. You could see water wells, sort of center right. Those are in the top end of the basin. We are the lowest user downgradient in Idaho, so we have no users downgraded from us, which allows us to manage water drawdown in this part of the basin. And I think, this is a very favorable water position because we purchased these water rights from the farmers, and we will ensure no new water draw from the basin as a result of mining activities. And in fact, our modeling suggests that we may even see some basin recovery as a result of us managing this part of the sub-basin. So an interesting opportunity. In terms of a high-level production profile, this is what it looked like at pre-feasibility. On the right-hand side, you can see the bars are, our production rate. It's a little bit lumpy. You can see the sort of boom and bust years, so to speak, or bonanza years. That's where we hit some of these high-grade lenses. We will smooth this out at feasibility. We've got a lot more drilling, and I think the strip ratio will drop from 3 to 1, 1.3 to 1 to something closer to 1. And a great opportunity here to take that and produce a mine plan and feasibility that's altogether better. We're targeting above 200,000 ounces a year average for those first 5 years. And I think our cost base will still come in around $10 a ton, of which the key component is mining. So these types of assets really do well when they're mined well, when the discipline to manage an open pit mine fleet, mine production really comes to the front. And I think these types of projects make really good open pit mining. So we're excited to be part of that. I was mentioning some drill results. We did come out today with some additional results. The new drilling, and these sections are from a couple of weeks ago. The new drilling is in the large sort of colored squares. We're seeing growth in resource on the margins of our prior resource pits. That's really important because it means those pits are going to push out when we float the new pits or the new resource constraining shells over the next few weeks. And we're working on an updated feasibility study right now. We also drilled in the upper screen there, the legacy heap pad. That was, or is, 30 million tons of material that was previously mined and extracted. Pegasus left some gold in that heap. We drilled it. It is today ore for us. And so that will become part of our resource and ultimately the reserve. We will remove that. And in moving that, that opens up that whole target area directly below it in blue, which is really undrilled. The geology is the same from that reserve pit on the right, going to the left. And so I think we've got a fantastic 500,000 million ounce discovery opportunity here down the road. And it speaks, I think, well to the growth opportunity. What have we done this year? We've been hard at the preparatory work for feasibility. 24 was the pre-feas, 25 was the field work in prep for writing the feasibility study. The dots you can see on that, on the image on the right are drill hole collars. So we targeted a 40,000 meter drill program. I think we'll get to about 33 by the end of the year. We had a bit of a late start because of rig availability, but we've covered a lot of ground both in Rangefront and in discovery. And it's been a very specific targeted program really to infill areas in the pre-feasibility resource where we had a gap, we had a technical question about a geometry of a particular or high-grade shell, or we needed to learn something about structure, or we needed to infill areas where we were modeling waste rock and we thought there was mineralization. And today's press release indicates very clearly where we're now starting to see conversion of waste rock in the prior model to what will be mineralization in this rock, in this model. Bunch of engineering is ongoing. We've got metallurgical columns for feasibility work are at the lab right now, very large diameter bulk samples. Very pleased at that ongoing work. And that will all head into the feasibility study, which is due for completion, as I mentioned, in October 26. This is our timeline, and I'll finish up shortly. As I mentioned, 25 is all about feasibility field works. 26 is about the engineering. We have named our engineers, and 3 engineering are the lead engineers. They did the pre-feasibility study and have significant experience in this type of asset in the US, based out of Tucson. We'll finish the feasibility study and October 26, go into detailed engineering, order our long lead items, which are largely electrical, and having completed detailed engineering by the end of 27, be in a position from a technical point of view to make a construction decision. Parallel to that, and below those bars, the columns, that is the permitting process. This is the standard NEPA permitting process, as it was historically. We have completed our mine plan of operations. We published a press release a week ago indicating we've received our completeness review of the mine plan of operations, which allows us to apply for the notice of intent. So we're in that process right now and would expect early in the new year to see that notice of intent come in. That's key because the NEPA clock starts once you receive the notice of intent. 24 months later, you get your decision notice. So that timing brings us to the end of 27 in parallel with the technical work, which means we can start construction early 28. It is a short construction period, so that has metal very late in 28. So essentially 3 years from now, we should be a producer if everything goes according to schedule. We have a very strong team. We have strong relationships with the agencies. We have a tremendous asset with some upside potential. We have enough resource to do a very strong feasibility study. So I have the people, I have the asset, and have the money to fund this. And so we are moving forward very clearly with the intent to build a new gold mine in Idaho in late 28. So in terms of catalysts, what will you be seeing over the next 12 months? You're going to see more assay results come out as the drilling program finishes. I think you're going to see reinforcing the message that there is upside potential in the resource, both internally as we get more resolution, grow the mine deposits. I think we're going to see strong metallurgical results come out of the column leach test, the bulk samples. I think will very clearly demonstrate that we understand the metallurgy and that run-of-mine leaching is absolutely practical and the way to go for this asset. You'll see in early Q1 an updated or a new resource estimate, the feasibility resource estimate, upon which we will base the feasibility study. You'll see us moving through the various engineering cycles to get to the end of that feasibility study, as I've said, in October 26. From a permitting point of view, the notice of intent, I think, is the key next milestone, and that's, and as I mentioned previously, that's when the clock starts. So that's a key milestone in permitting, and I think once at that point you de-risk where you're going, and you then go into the EIS and stakeholder engagement pieces, and again, that will be news flow going forward. So I think, an interesting time, a very interesting time for Black Pine and for Liberty. We're moving, we've created a team. The team's got technical capability to deliver this feasibility study and ultimately deliver a construction-ready plan. And I'm really excited to close out this year and start the next and get a feasibility study in front of the market. So thank you everybody for listening. I have a number of questions here, so let me have a look. You've just cleared a key permitting hurdle for plan of operations. What are the next 2 or 3 regulatory milestones? I think I mentioned that. Notice of intent is the key one, and then that then leads into draft EIS publication a year later, and then final EIS. So those are the sort of notice of intent, draft EIS, final. So the financing, the question here is 327 initial capital, what's our financing strategy? I think the honest answer to that is we're working through that right now. We really need to see the final numbers from feasibility. We have already engaged with both the Wheaton, who are, as I mentioned, our royalty holders. They're very interested in supporting us into the build. We've had a lot of conversations with banks and with the debt people. I think this is given the long mine life, this is an eminently fundable project, and we're going to start sort of formal project finance around about the middle of next year. Once we have the feasibility study, the bankable feasibility study published, to really have some serious discussions. And I think our intention is to take this and get a formal finance package sort of approved mid-27. That's our target. Presentation states, question here around groundwater conditions. What are we monitoring for, and what water inflow supplies could developer? So the answer to that question is we've just completed, literally a week ago, a very large-scale aquifer pump test. That's a critical piece to allow us to determine the fundamental flow parameters of the basin. We will end up doing a full basin model as part of feasibility, but also as part of compliance for our water abstraction licenses. At this stage, we don't anticipate any surprises. And the reason is that the wells that we're going to be pumping have been pumped for a significant period of time because they're agricultural wells. And so there's a long history of abstraction here. And I think not expecting surprises on water. Thanks, everybody. I appreciate you listening, and please feel free to contact Liberty on our website, libertygold.ca. There is also info@libertygold.ca if you would like to send an email. Appreciate your time, and have a great day.